I'm going to share with you the fastest and easiest way to buy a house if you're making over $70,000 in this video. So many people think you have to make a whole lot of money, you got to have a super high credit score, and you got to have a big down payment. I'm going to share with you the fastest way to buy a house. If you're watching this video literally 30 days from right now, you could be closing and moving into your next house. And no, you don't need a whole lot of money. In fact, you can purchase a house just like that one, or just like that one, or just like that one I'm about to ride past for only $1,000. And here's why you need $1,000, because you need $500 for your deposit and you need $500 to do a home inspection. The rest is a government assistance program of which you don't have to pay back any money. They're not giving you money for a down payment. Here's how it works. If you have a 620 or higher credit score, you've been on your job for 2 years, you've paid your taxes, you can show proof that yes, I've made $70,000+ a year. And today, if you don't have any debt, a lot of people have credit card debt they can pay off, or they have a little bit of credit card debt or a little bit of car payment. I always tell folks this, it's really important to know, mortgage lenders, bankers, they don't look at what you have as far as your payment on your cell phone. They don't look at a lot of that will hurt you. Although they have changed the way they're looking at rent is now going to be included in your credit score, which could help. Utilities that you're paying, your cell phone bill that you're paying, all of that is changing where it's going to be included, so it can help you boost your credit score. They're trying to help people get their credit score up, because there's a lot of people that, and me included, it happened to me years ago where literally I had a credit card, I didn't have it set up on auto pay. I literally missed a $7.31 minimum payment one time. It tagged as a 30-day late. I went to buy a house, it popped up, and I had to write a letter of explanation of why I was late on a $7 payment. So yeah, that's why I get a little frustrated with credit. It's not your credit. That's a whole nother video. Bottom line is this, you don't need a whole lot of money out of pocket, don't need a crazy high credit score. I'll show you how to boost your credit score. I'll show you exactly why. This is made to help people that earn less than $119,580 if you're a family of 4 or less. So if you're a single person, you're a married couple, you're just starting out, or if you have a child or two, if you're a family of 4 or less, your income limit, combined income or just your income, but they include both incomes if you're paying your taxes and you're filing jointly as a married couple, $119,850, then you can be approved for a house. Now, if you don't have any debt, a $119,000 house gets you a pretty nice house at this day and age. For example, if you're making $70,000 a year, at $70,000 a year, you're approved for about a $270,000 house. Your payment on that's going to run you about $2,000 a month, and of course, that's principal, interest, taxes, and insurance, and you can go into all that in a whole nother video. What I'm trying to share with you is that you don't need a whole lot of money, you don't need a whole lot of income. If you have $70,000 or more in income and you can prove that, then you can purchase a house. Because if you purchased a house at $270,000, your payment's going to be around $2,000 a month. A lot of you watching this video, give me a thumbs up, feel free to chime in, comment, if you will, that you're paying $2,000 a month. And here's something else that I want you to do. I want you to really understand this. A lot of people say, Wayne, I want to own a house, but I'm not too sure if it's a good investment. Listen, I tell everybody, and I'm a real estate broker, I've bought real estate, it's helped me financially in a major way. And anybody that invests in stocks, they also will typically invest in real estate if they're pretty well off and well-to-do, because the average home appreciates 4% per year. So if you have a home literally that's worth $200,000 and you bought it and it appreciates 4% a year, well, next year it's worth $208. And then if it appreciates another 4%, well, the 4% appreciation is based on the $208, not the $200 that you bought. It's called compounding accruing interest. That's how it accrues. So that's how you can purchase a house. For example, right now today it's worth $300,000. And at the average appreciation, which is 4%, in 20 years from now, that house is going to be worth $657,000. And a lot of people say, man, there's no way. Well, here's what you have to do. Go to your friend, family, coworker, family member, ask them how long they've been in their house. We've all heard these stories. Granddad bought his house for this. Ask any of your coworkers, ask any of your family members, ask anybody that's been in their house 7, 8, 10 years, what they paid for their home, and then get their address, put their address in Zillow, and then look at the Zestimate. Now that varies, don't get me wrong, but that gives you a good idea of what that home is actually worth, and it's kind of mind-blowing, and you don't realize that. And what really gets frustrating is if you're kind of on the fence, should I buy, should I not, I'm not too sure, let's just do this. We have to have water, food, clothing, and shelter, right? But when you rent, you're paying 100%. People say, Wayne, what do you mean by that? Well, you're paying 100%. You get nothing in return. See, for example, if you go buy a car and they charge you 10% interest, they're charging you interest when you pay that back. However, once you pay that money back and you own the car, you own an asset that you can sell that's worth money. Now, when it comes to vehicles, they depreciate, not appreciate, so they go down in value. When they go down in value, then that means it's worth less than what you bought it for originally. But here's what you have to understand that's really important. Homes appreciate. So when you buy a home, it's going to go up in value. It's not going to go down in value. And I always tell people, if you've rented for the last 5 years, look at what you've paid per month, per year in rent for the last 5 years, and that gave you shelter. But you get nothing in return. That's why I mean it's 100%. So a lot of people want to buy, a lot of people don't want to buy. There's more people out there that want to buy. A lot of people say they don't want to buy. It's because they are making excuses because they can't buy. And I'm here to tell you that if you want to buy a house, you owe it to yourself to own a piece of real estate. Buy your home. It gives you stability, it gives you structure. You don't have to worry about the landlord coming to you and say, I'm going to sell the house. You don't have to worry about them coming to you and say, I got to up the rent. Well, why do they up the rent? Well, they up the rent because taxes go up, insurance go up. You have to pay taxes on that home. Unfortunately, I don't like it, but you got to pay taxes on the home every single year. And your tax amount that you pay is based on the assessment of that value of the home. So when the value goes up, guess what? The county, the city, the parish, they want more money because now it's worth more, and it's worth more to you than it's worth more to them, and they want more tax money. Don't shoot the messenger. Insurance is the same way. However, insurance, you want it to make sure that you cover the property, Lord forbid, there would be ever damage. Somebody drives a car through it, struck by lightning, catches on fire, whatever it may be. Now, flood insurance, I always know this, flood insurance is different than actual homeowners insurance. I always tell people, if you're in any kind of flood zone, it doesn't matter. If you're in flood zone C, B, X, A, it doesn't matter. Get flood insurance. I personally live on the Gulf of America, as they call it now. I would not have flood insurance. I have flood insurance. I wouldn't live down here without it. So it's really simple. The quickest way to buy a house is to get approved. How you get approved is reach out to a lender. If you need help, you can go to contactwayne.com or anybody that you feel comfortable with. Get approved. If you need an agent, you can go to contactwayne.com, reach out to us. We connect you with vetted agents in every city, county, parish, all across the country. I tell everybody, here and in Canada, if you can see my face and hear my voice, we can help you buy and sell a piece of real estate. I've got connections. I work with one of the largest real estate companies, lenders in the nation, and we just make that process easy. I'm a big believer in you learn it and you master it and you teach it. And I've been in the real estate business 30 years now and helped thousands of people, and I'm just a big believer in you learn it and you master it and you teach it. So it's really just that simple. You get your credit score to 620, you've been on your job for 2 years, you show proof of income. If you're a veteran, you can do a VA loan, and you want to do that VA loan because when you do a VA loan, the government gives you 100% of the purchase price of the house. The seller can pay your closing cost. When the seller pays all your closing costs, you get into that home for no money out of pocket, and you don't have to pay that private mortgage insurance. However, there is a funding fee, of which is that closing that the seller can pay for you on your behalf. Now, you can put money down on a VA loan. There's nothing wrong with that. But a lot of people are like, well, if I'm doing VA, I'm not going to put any money down. I got some money over here, and it's earning more in the stock market than it would pay. So it's more than one way to skin a cat, as they say, you know. USDA is the simplest, easiest way when you want to purchase a house right now with little to no money out of pocket. And it's also important, too, that we connect you with lenders, and you connect with a lender that knows the state programs. A lot of states have down payment assistance programs. However, it's really, really, really important to make sure you don't have to pay that money back. And when you do USDA, you're not having to pay the money back. So you're not getting a second mortgage. You're not borrowing money for a down payment that you have to pay back. They're basically saying, okay, you want to buy this home, it's worth $300,000. It's appraised for $300,000. It's worth $300,000, and we're going to give you $300,000 based on your income, your taxes, your credit score, and your debt to income ratio. They're going to look at how much money you have coming in, how much money you have going out, and they will tell you based on that. Now, what's really cool is really good lenders out there, and we work with some of the best, I believe. They're good people. Really good lenders will actually show you what you can do in a simulation process. So they'll look at everything that you have coming in, but most importantly, what do you have going out? They'll look at any credit cards, any medical bills, anything that may be derogatory on your credit and anything that you may be paying monthly. And they'll simulate and show you that if you paid off this card or this card or this card or paid this balance down, then what it would do to your score. So that way you actually have a game plan and go, okay, I didn't realize that. I can pay this card off and pay this one down just a little bit, and my score will boost 50 points, 60 points. It's really as simple as that. It's that easy. It's just knowing and playing the game. And that's why I'll tell folks, if you're even $60,000, if you're $60,000, $70,000. We had a school teacher the other day, she made $50,000 a year. She had absolutely no debt, just paid off her car, and she bought a home, $215,000, and it was a brand new house. 3-bedroom, 2-bath, brand spanking new house in Madisonville, Louisiana. Nice neighborhood, nice area, good schools. Like, I know it's unheard of in a lot of parts of the country, especially if you're up around California, Oregon, Washington, New Jersey, up around Chicago. But I always tell folks, it's not a bad idea to look on the outskirts, because these USDA loans are just that, United States Department of Agriculture, and they're helping you purchase a house on the outskirts, not in major city limits. They are made for specifically for you to move and live on the outskirts of town, which help people. And it's just a workaround, the way they do it. They've been doing it now for years. This is not some big secret. This is just what they've been doing to help people. And unfortunately, I don't know why the news media doesn't tell everybody. Fox News, CNN, CSNBC, everybody should be shouting to the rooftops about this housing program. That's why I started Wayne Turner TV. I have almost 1.5 million followers across all platforms, because I believe in helping people. You learn it, you teach it, you give back. It's just that simple. Until next time, thank you for watching. Be sure and subscribe. Share this with somebody that you think it would help and be beneficial. Comment, ask questions, anything that you have questions-wise, and also your stories. Tell us, hey, I paid this for my first house, and this is what it's worth today. Chime in. We work as a group on this channel, and we do so because when we work collectively together, it helps people. Thank you again for watching. Next time, thank you. God bless.